Hi guys, I want to do another quick ETF video for you guys. This one will be for ETF called VGT. This is going to be a kind of a tech ETF. I think officially it's called Information Technology ETF. It's a Vanguard fund. Expense ratio for VGT will be, I believe it's 0.10%. So it's pretty cheap. Again, a little bit more than say VTI, but comparatively to other ETFs, definitely mutual funds, it's definitely a smaller fee. Dividend, I believe it's pretty small dividend. It's less than 1%. I believe it's 0.6% dividend, which is probably pretty consistent with most growth stocks or growth ETFs are not going to have a large dividend. And then 10-year return, I believe the 10-year return was around 21%. So quite a bit higher than VTI or even most ETFs. But you have to remember, greater return also typically means greater volatility, greater risk. So even though it can have a pretty high output or high return, when the market is bad, it can be totally opposite. Who knows? It could be minus 20%. I mean, long term, probably not, but just keep that in mind when you're calculating, what you think your risk is, and if VGT is a fund that kind of fits what you're looking for or not. And again, this is not personal. This is not financial information, financial advice. So kind of doing your own research before you put any money into the market. Index. The index obviously is going to be tech stocks or tech ETF. And it is, I believe it's 99% US companies. So it is a domestic ETF. Holdings, I believe the holdings were around 300. I believe it's approximately like 312 or something close to that, approximately 300. And then market cap is going to be large. I mean, technically it's mega cap, but it's going to be classified as large cap growth. Okay, so let's review real quick. VGT is the ticker for the ETF. Expense ratio is 0.1%, pretty low. Dividend is also low, 0.6%, so less than 1%. 10-year return is pretty high. On average, annual return is about 21% over 10 years. Index is it's a tech ETF, and it is domestic, or 99% of the companies in the ETF are domestic. It does have approximately 300 holdings or 300 stocks in the ETF. Again, keep in mind, if we're asking if it's diversified or not by number, it is diversified. But the problem is it does have sector risk. So if the Nasdaq, crashes for the day, then more than likely, all 300 of these companies will probably be down for that day as well. So it is a lot of companies. Typically more than 20 to 30 companies, 20 to 30 stocks is considered diversified, but um, uh, it kind of depends what you're looking at. From a sector standpoint, it is not diversified because it's only tech. From a number of stocks, yes, it's diversified by number, but it just doesn't have anything in it other than tech companies. And then it is large cap growth. Okay, well, thanks for listening, guys, and I'll see you on the next video.